Hey everyone, welcome back to Corporate Decoder. Today we are diving into a recent 8K filing from Liquidity Services, Inc. Don't worry, it's not as boring as it sounds. Think of it as peeking behind the curtain to see what decisions happened at a company that helps organizations sell their unwanted stuff from warehouses to military surplus. Basically, we're going to look at what their shareholders voted on and how it all went down. It might sound dull, but the results can tell us a lot about where the company is headed and who's calling the shots. This report is dated February 27, 2025. This is like the snapshot date of the events we're going to discuss. This tells us when all of this information became official. Liquidity Services, Inc. is the company we are talking about. They're based in Bethesda, Maryland. They're traded on the Nasdaq stock market under the ticker symbol LQDT. This part is mostly legal boilerplate, checking boxes to say this isn't some sort of communication around bigger events like a merger or a tender offer. Basically, this filing is just about what happened at their annual meeting, not a sign of something bigger brewing. Now let's get to the meat of the filing, the voting results from their annual meeting. Companies hold these meetings so that shareholders or people owning company stocks can vote on important decisions. The results of these votes tell you what the owners of the company want. First thing that happened at the annual meeting was the election of directors. Directors are like the board of governors for a company or a group of people elected by the shareholders to manage the company. The filing shows the votes for the directors, William Angrick III and Edward Kolodziejski. Angrick got around 24.2 million votes for him, with about 379,000 votes withheld and about 2.8 million broker non-votes. A broker non-vote happens when a broker, someone who manages stocks for other people, doesn't vote on behalf of their clients because they haven't received instructions. Kolodziejski received about 22.4 million votes for him, about 2.1 million votes withheld, and the same amount of broker non-votes. These guys are going to be around for a while, as they are in office until 2028. Next up is the vote to approve Deloitte & Touche LLP as their accounting firm for the fiscal year 2025. Accountants are important because they make sure a company's financial reports are accurate and honest. The vote was overwhelmingly in favor, with about 27.4 million votes for, only about 29,000 against, and around 7,900 abstentions. So Deloitte & Touche LLP is in for another year. This doesn't mean much on the surface, but it's a sign of trust, and it means the company is likely happy with their services and, more importantly, their objectivity. Lastly, the shareholders voted on executive compensation, or how much the top people in the company get paid. This vote is not binding, meaning the board doesn't have to listen, but it's a good way for shareholders to give their opinion on whether they think the executives are getting paid fairly. Around 24 million votes for the compensation plan, 609,000 against, with about 6,000 abstentions, and about 2.8 million broker non-votes. The shareholders generally seem happy with how the executives are being compensated. Now, let's put this into perspective. Liquidity Services helps companies and government agencies sell their surplus stuff. Think old office furniture, construction equipment, even military equipment. The fact that all the proposals passed without major dissent suggests that the company is stable and that shareholders trust management's decisions. Looking at the bigger picture, Liquidity Services operates in a niche market. The economy is always in flux, so there is probably a constant need for businesses and organizations to get rid of excess assets. That makes Liquidity Services pretty valuable, especially in times of economic uncertainty, when companies are looking to cut costs and streamline operations. The strong support for the executive compensation plan suggests that the shareholders believe the current leadership is doing a good job and that the company is heading in the right direction. However, it's worth keeping an eye on those broker non-votes. While not necessarily a sign of trouble, a consistently high number could indicate a lack of engagement from some shareholders or issues with how brokers are handling voting instructions. In conclusion, the 8K filing paints a picture of a company with solid shareholder support and a clear direction. The successful election of directors, the ratification of the accounting firm, and the approval of the executive compensation plan all point to a stable and well-managed organization. Thanks for watching. If you found this breakdown helpful, hit that like button, drop a comment, and don't forget to subscribe for more corporate deep dives. See you next time on Corporate Decoder.